Hello, traders. FX Pip Collector here. Today is Wednesday, January 29th, and this is my morning video where we like to take a look at the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely join my free Discord channel. It's 100% free to join. The link is up here in the corner at the end of this video and in the description of this video. If you would like to join my membership, then you do so by signing up at my website, fxpipcollector.com, and you get access to all the benefits listed down here below for only $30 per month. So anyways, I always like to start off by looking at the news for the day. Today is actually a really big day for the news. First thing we have is this big Governor Bailey speaking from the Bank of England. Anytime somebody speaks from any one of those central banks, it definitely could cause some movement. So keep an eye on the pound pairs around that time. And then we have two different interest rate releases coming out today. We have the Canadian interest rate, which they do plan on lowering interest rates 25 basis points. And then we have the US interest rate this evening, which they don't plan on lowering interest rates, but you never know. They definitely could still lower. And I will be live streaming for this news event right here, this US interest rate news event starting at 6:30 UK time. So definitely stop in for that live stream here on YouTube if you want to see my latest analysis right before the big news event comes out. So anyways, going to the US dollar index, this US dollar definitely made a nice perfect five ways down. I would assume that this is a wave A, and I would assume that we're now in a crescent to that wave A, most likely a wave B. But I just want to mention because today is a news day, it's a really big news day, that sometimes what we think is a wave B is actually the continuation of the uptrend. And sometimes it goes up and makes a brand new high. So don't rule out the possibility that this does go up and make a brand new high on the US dollar, which would mean something very similar to all the US dollar pairs. Going down to the euro dollar, if you've been keeping up with my videos, you said that you've seen me say that this is most likely now making a cut into this last push up. This last push up to me is very, very clearly five waves. Now I would expect to see a correction to those five waves like a wave B. But just like on the US dollar index, because we have such a big news event coming out today, I really wouldn't be surprised if it went down and took out these lows and made a new low. So definitely be a little bit cautious. There's always a chance that this wave B just keeps on going and it's actually the continuation of the downtrend. So going down to the 1 hour time frame, I got my Fibonacci retracement on this whole move up right here. If you see that we got our Fibonacci retracement on the whole move up, like I said, I would expect that what we're doing now is we're making a correction to this wave up. I would expect it to probably go down to at least one of these three Fibonacci levels, making some sort of a corrective pattern, like an ABC, maybe a WXY, or some sort of a flat. I honestly don't really know how it's going to play out exactly, but I think there's a good chance that it'll make some sort of a three-way pattern down to one of these three Fibonacci levels for a wave B before it continues up for a big wave C. Just keep in mind, like I said, that we have a very big news event coming out today, and I honestly wouldn't be surprised if it went down and made a brand new low, because a big news event like this is probably not going to cause a wave B. It's either going to cause it to continue to downtrend, or maybe it'll cause it to just keep on trending up. So be a little bit cautious today. Definitely a really big news day today. Moving on to the pound dollar. Now, the pound dollar never did break structure to the upside like some of the other dollar pairs. And we're making a lower high after making a pretty nice five-wave pattern up. The fact that we never broke structure means that if it does continue to downtrend, it would be perfectly normal. It would just be another correction within a bigger downtrend. So keep that in mind. No break of structure means that this uptrend is not confirmed and that we still could go down and make brand new lows. Going down to the 1 hour time frame, I like to zoom out quite a bit on the 1 hour. I got my Fibonacci retracement on this whole move up right here. Now, I definitely am assuming that we're probably going to make a wave B right now, and that this is probably going to make some sort of a corrective pattern down, some sort of an ABC, WXY, some sort of a flat pattern down to one of these Fibonacci levels before we get another big push up. But like I said, the fact that we never broke structure on the daily time frame tells me that this may not even be a wave B. It may literally just keep on going down and make a brand new low. So I would definitely suggest looking for shorts, and if you're looking for shorts and it just goes down and makes a brand new low, shouldn't really be too big of a problem, really. Moving on to the Aussie dollar. Now, the Aussie dollar is another pair that I am short on. I'm short on the euro dollar and the Aussie dollar. This is actually a nice break of structure, and it did kind of hold. And I would expect this move down that we're currently seeing to be a correction to this push up and probably eventually go back up. But sometimes what we think is a wave B just ends up going down and making a brand new low because the higher time frame trend is still down. So now that we have a break to the downside, I would definitely suggest looking for shorts. And if you're looking for shorts and it just keeps on going down, that definitely shouldn't create any issues. Now going down to the 1 hour time frame is where we got our Fibonacci retracement on this whole push up right here. I personally think that this whole push down is likely a wave A, and I think there's a good chance it's going to make some sort of an ABC shape probably over the next day or so, probably an ABC of B, and this is probably an A. So just like I said on the higher time frames, I'm definitely expecting to see a wave B on all the dollar pairs. But the fact that we have such a big news event today, and the fact that I don't really think this big news event is going to cause like a wave B or B and a wave C, it's probably more likely just going to cause like the continuation of the downtrend, or maybe it'll bounce from a fib level, go up and break structure, and cause a continuation of the uptrend. So be a little bit cautious in assuming that this really is a wave B. So moving on to the, let's go back up. I don't really do the Kiwi dollar. It's exactly the same analysis as the Aussie dollar. So let's move on to the US dollar CAD. Now the US dollar CAD never broke structure to the downside. The trend is 100% still up on basically every single one of the higher time frames. I honestly would not be surprised if this goes up and makes a brand new high and potentially continues the uptrend. So keep that in mind that a lot of these dollar trends don't have to be over. Going down to the 1 hour time frame is where we got our Fibonacci retracement on this last push down. If this really is an A, and this really is a B, and this really is a C, then it'll give us a Fibonacci bounce, and it'll give us the continuation of the downtrend. Nice big engulfing move to the downside. Now we do have Canadian news today, so it does seem like it could definitely end up doing something like this. So if you see a big bounce at a Fibonacci level, a nice big engulfing move to the downside, you definitely could try to go short. Just remember that if you are going short, then you're fighting the higher time frame trend. Fighting the higher time frame trend usually leads to losing trades. So I personally would suggest looking for longs. I would suggest being long already and keeping in mind that this may just keep on drifting up, making higher highs and higher lows. So let's take it down to the US dollar Swiss. US dollar Swiss, if you zoom out, is one of the ones that I've been saying really doesn't look like it's over because it never did take out the high of the previous downtrend. And most wave A's, wave ones do take out the wave four, the previous trend, which this has not done yet. So it definitely would make sense for me for this to just keep on going up. Now this move down to me definitely looks like a trend. It doesn't really look like a complete correction. It looks like it potentially should go up and make a B, a C, and then go back up like that. But sometimes what you think is a wave B is actually the continuation of the uptrend, and sometimes it just goes and goes and goes. So be very, very cautious with assuming that this is going to go down. Going down to the 1 hour time frame is where we got our Fibonacci retracement on this last push down right here from here to here. I am assuming that this move that we're currently in is going to be a wave B, which a wave B would be a correction to this whole push down, likely a wave A. Probably go up to one of these Fibonacci retracement levels in some sort of a corrective pattern, like an ABC or WXY or something along those lines. Maybe end up doing something like this, going up to a fib level and continuing back down. But like I said, be careful assuming that. I personally would preferably just go long, and if you go long and it just keeps on going and going and going and going, making new highs, then that shouldn't be too much of an issue for anybody. So be very, very cautious today. We have a lot of really big news coming out today, and these dollar trends are really not proven to be over. I would not be surprised if any one of these or all of these dollar trends just kept on trending and took out the previous highs and just kept on going. Now, moving on to gold. Now, gold has definitely hit my target. The 100% Fibonacci extension of wave A, projected out the bottom of wave B, is my target for wave C. So we definitely hit my target. And now I do think there's a good chance we are going to end up going down for a big wave C. Potentially about 2,500 pips to the downside. It's not going to happen in one day. It's probably going to take about 3 weeks for it to play out if that is what's going to happen. But one thing we have to be cautious about on gold is that we don't have a breaker structure to the downside yet. We don't have any proof that this uptrend is over yet. There's always a chance that this goes up and makes new highs. I really try to teach people that assuming anything about the market is very dangerous. If you assume that this is over without any proof that it's over, and you go short, a lot of the times you'll get smacked in the face and end up with a losing trade because there's no proof that the trend is over yet. Going down to the 1 hour time frame. Now, I would hope that this would be a wave A or wave 1. I'm hoping it's a wave 1. I'm kind of hoping that this is a wave B or a wave 2. I'm hoping it's a wave 2. I got my Fibonacci retracement on here. I'm looking for a breaker structure to the downside at a fib level. So if this goes down, break structure with momentum. Hopefully it goes down and makes a big old giant wave 3, proving that this wave B on the higher time frames is complete. But if it does just go down and make a wave C like this and then turn back up and break structure, we'll know it's a wave C. We'll know that we need to get out of our shorts, and we'll know that it's time to go long, potentially for the continuation of the uptrend. So I am definitely looking for the end of this wave B on the much higher time frames. But the thing is we have zero proof that this wave B is over yet, which means that the uptrend could continue at any point. So let's move on to the US dollar yen. US dollar yen definitely broke structure to the downside, and unless it goes up and breaks structure back up, I am looking for shorts on sort of time frames. If it goes up and breaks this blue line and holds above that line, I'll be more than happy to start looking for longs again. But so far, the trend is down, so I would be looking for shorts on sort of time frames. We got one nice big impulsive move up. We got what looks like a corrective down. If this makes an impulsive move up and that makes either a lower high, and impulsive down, I would go short. If it goes and breaks above this high right here and holds above that high, then I would start looking for longs on pullbacks. I personally am not even trading these short time frames. I'm swing trading the higher time frames, but if I was trading the shorter time frames, I'd either be looking for three waves up, impulsive down, lower high to go short, or I'd be looking for a break of structure to the upside and then three ways down to go long for the continuation of the uptrend. Moving on to the euro yen. Now, I've been talking for a few days now about how it looks like this potentially should go up and make like a 1, 2, 3, 4, 5 of C. But I've also been saying that it looks like this wave B is over on the weekly time frame. If this wave B is over, then this should be actually going down in a big old giant wave C. So I am definitely, like I've been saying, I personally would rather go short on this. I would rather not be looking for longs because I definitely am assuming and thinking that this is going to go down and probably take out these lows, making a wave C of wave 4. So we have to be a little bit cautious on this because these yen pairs are definitely going to be affected by today's dollar news because they are risk on, risk off currencies. So going down to the 1 hour time frame, there's definitely still a chance that this move down is a cuts into this move up right here. Let me zoom out just a little bit more. So this move up right here could end up still being a wave 1, and this move down could still end up being a crescent to that. So if you get a Fibonacci bounce, a nice turn to the upside, then it definitely still could be a wave 2. It could be a wave 3 of wave C. So a 1, 2, 3 of C. So if you do get a nice Fibonacci bounce, then yeah, I would go long. But if it breaks and holds below here, and based on the weekly time frame, potentially having lots of pips to the downside, it may be a better idea to just focus on going short at the end of every pullback you see, because the higher time frames may be telling us that we are already in that wave C of wave 4, like I showed you on the weekly time frame. So let's take a look at the pound yen. The pound yen is very similar. I mean, I've been saying for the last few days that it looks like it potentially should go up, making 5 waves up for wave C. But I also think there's a good chance this wave B is over. And if this wave B is over, it potentially might just go down and down and down and down. I much prefer to try to get short. Even if it does go up and make this wave C, I'm definitely focused on going short because that's going to be where the big money is because that's going to be the big move to the downside. So going down to the 1 hour time frame, pretty similar to the euro yen. I got my Fibonacci retracement on this last push up right here. This push up right here. If this move down right here is a correction to this move up, then we would likely get one, two, three waves down to a Fibonacci retracement level and a nice engulfing turn to the upside, telling us that this is a wave one, this is a wave two, and that it's going up for a wave three, four, five of C, like I showed you on the daily time frame. But on the other hand, if it breaks below this line right here and it holds below that line, it's probably more likely just going to keep on going down. I personally am focused on going short. Even if it does go up and make a wave 3, 4, 5 of C, I'm definitely still going to be more focused on trying to get in to the short side because that big wave C of wave 4 is going to be hundreds and hundreds of pips to the downside. And I definitely want to participate on that when it happens. So, anyways, as far as all these other pairs, I do analyze every single thing on this list every single day for my premium members. I do Zoom meetings 4 times a week, every Tuesday, Wednesday, Thursday, and Friday, where we analyze the market, look for trades, and I teach. And every single swing trade that I take, I do stay with the group at the time of entry. I am a very long-term swing trader. I'm not even trading the 1 hour time frame or below. So just keep that in mind if you do join my membership that I am definitely not trading the sort of time frames. If you would like to join my membership, you do so by joining at fxpipcollector.com. The link for that is down here in my description, and you get access to all these benefits for only $30 a month. Or if you just want to join my free Discord membership, it's 100% free to join, and you get the link for that up here in the corner, and it is also in the description of my video. So, anyways, I hope everybody enjoys the rest of their day, and as always, thank you and happy trading.